Chapter 5, State and Local Governments Interfund Activity. Work with page 215 of the text, the GASB Standards. Know this very well. Two types of interfund activity: reciprocal, equivalent of exchange transactions, payments for purchase of goods and services at their external fair value, loans and repayments of loans. Non-reciprocal activity, equivalent of non-exchange transactions, transfers of cash for which goods or services have not been received, interfund reimbursements. Transactions between funds are of particular interest to financial statement preparers and users, since failure to properly report these transactions results in two funds being misstated. Types: interfund transactions may be interfund loans, interfund services. We used to call this quasi-external. Reimbursements, transfers. Interfund loans. If loans are expected to be repaid within a reasonable period of time, the lending fund should report the loan as a receivable, and the borrowing fund should report it as a payable. This activity should not be reported as other financing sources or uses. These go to the balance sheet. And we know that other financing sources and uses goes to the activity statement. If the loans are not expected to be repaid within a reasonable period of time, or never expected to be repaid, the transaction should be accounted for as a non-reciprocal transfer out, transfer in, reported on the activity statement. There is more on this later. Example: due to the water utility fund. This is a liability. The general fund owes the enterprise fund water utility. Instead of using accounts payable, we use due to. Due from is an asset. Another fund owes our fund. Current, due within 1 year. Due from is an interfund receivable, and due to is an interfund payable. Remember, we have 3 fund types and 9 different funds. We also use due to and due from when working with amounts owed to or owed from the state or federal government. We just do this instead of accounts receivable, accounts payable. Long term, due more than 1 year, the account changes from due to advance. Advance to other funds is a long-term receivable. Advance from other funds, a long-term liability. What types of accounts are shown on your CAFRA entity? Interfund services. Sometimes we call these quasi-external transactions. These are transactions, typically sales of services, between funds and are exchange-like transactions. They are treated as revenue and expense or expenditure, depending on the fund, of the affected funds. Sale of electricity by the Electricity Enterprise Fund to the General Fund. This sale would be treated as revenue for the Enterprise Fund and expenditure for the General Fund. Reimbursements. Initially, one fund pays for a good or service of another fund. When the reimbursement is made, the expense or expenditure is recorded in the correct fund, and the incorrect expense or expenditure is reversed. It's simply a reimbursement. Assume the government receives a bill for engineering services in the amount of $10,000, and it is initially recorded in the general fund by debiting expenditures, crediting accounts payable. Later, it is discovered that $2,000 of these services were for the Electricity Enterprise Fund. So now we have to debit due from electricity, credit expenditures in the general fund. The enterprise fund would debit expense and credit due to the general fund. So we're just moving it to the proper fund. Transfers. Any assignment of resources from one fund to another where there has been no expectation that the amounts will be repaid. Transfer into a fund are considered other financing sources. Transfers out are considered other financing uses. Recurring transfers, such as for debt service, are estimated and are commonly built into the general fund budget. Transfers are common. Get used to this. For the government type funds, transfers are shown on the statement of revenues, expenditures, and changes in fund balance. Other financing sources, this includes proceeds from issuance of long-term debt and transfers in from other funds. Other financing uses, this includes transfers out to other funds. These are not revenues or expenditures. They are other financing sources and other financing uses. Additionally, since most of these transactions are eliminated in the government-wide statements, it is particularly important that they be identified in the accounts of the affected funds. The only transfers that appear on the government-wide financial statements are ones between the governmental funds, general, special revenue, capital projects, debt service, and the internal service fund, the proprietary fund, and the enterprise fund. See page 50, Government-Wide Statement of Activities. Line item, transfers. Total general fund transfers. This is a reciprocal. So you can look at page 50 and follow through with how these are reciprocals. Special items. Based on modified accrual accounting and current financial resources, land or capital assets is not recorded in the governmental funds. It is shown in the government-wide financial statements, the dual reporting, dual perspective. Thus, when the land is sold by a governmental fund, cash is debited and special item is credited. Special items are significant transactions that are either unusual or infrequent, but within the control of management. So the general fund sells a capital asset. Proceeds are designated as special items, debit cash, and credit special item, proceed from sale of capital assets. Review the following pages. So take some time and review this to interact with the material that was covered in this presentation.